Greetings, everybody. It's Jeff Scott. This is the weekend review for 12/8/2019. I still have my cold, so that means if you don't like to hear somebody who might be coughing, choking, and grunting, feel free to turn this off. For those of you who are not named Jack, please continue with me. Just got back from the American Society of Hematology meetings, where a lot of exciting data for patients with blood cancers and related diseases. Really enjoyed the meeting. A lot of cool things. Unfortunately, Celgene is now owned by Bristol Myers Squibb, which is a big company, because Celgene had some impressive data. A lot of the drive in healthcare of late may have been related to data released prior to this meeting. And so it'll be interesting to see how healthcare holds up after the next couple of days when the news is all out. I titled today New Highs and Beyond. I personally feel like this market's going higher when I look at some of my long-term technicals that I look at on the market. When I look at things like the Hgsi video and some of their data that I talked about last week, I think this market goes higher. That said, CNBC and Ned Davis were talking about this being a blow-off top. I don't see that. Based upon usually blow-off tops, the market goes parabolic and after the end of a major run. Compared to where we were a year ago, I don't see that major run, although we've come off the bottoms. But regardless, it's a strong market, and we'll see what this week brings. Right now, the futures are down about 14 points on the NASDAQ and 43 points on the Dow and 4 points on the S&P. I remember last week when I started, the futures were way up, and I joked that by the time the market opens, they probably will be down, and they were down. So let's see what's going on here. As always, it's for education purposes only. I'm a doctor, not a broker. I'm independent. I paid for my tools, and trading involves risk, and you alone are solely responsible. I have a wedding next weekend, and after that, we get into the holidays. So I may do one more next weekend or sometime after it. And then if George releases to me the initial version of the person pivots add-on with his signals, HCDs, LCDs, and other indicators, I'll probably do a during the market live session so I can show people how I use his signals and how, to take trades. And I can tell you of all the things I use, the things that have made me the most money over the last couple of years has been John's stuff. For those who are new to me, CanSlim has been where I started. Improve with Morales and Catcher, Take to the Computer by Ian Woodward. This is John. These are two of his books. John's just a great trader, a friend of mine, and really taught me how to go from a list of stocks to how to make money by trading them. Van Tharp, the king of money management. That's my dog moaning in the background, not me, if somebody's taking notes on my sounds. And that's Cigar from Superior Profit, who I've enjoyed working with and using his indicators. All right. I own a lot of tools. I'm not going to spend much time here, but I use TradeStation, Thinkorswim, frankly, with John Persons and Cigar's indicator sets, as well as some of mine that I grew out of my time with Ian. And then I use HGSI, as you'll see, for most of my analytics, as well as EdgeRater. For those that don't know HGSI, the program, as I mentioned, I'm independent. I don't get any money from the company. I pay to have my own things put in there. If you would interested, it's a free 30-day trial. They don't take your credit card. And if you go to the website under investing strategies, you'll see hundreds of movies from me, Ron Brown, and others. Where are we on this? Are we going into a stage 2 markup? Weinstein stages? Hard to believe after a run like we've had this year. But I just feel like we're going to have a leg up into year's end, and then we'll see what happens next year. As I've talked about, every time it looks like we're rolling over, think Tuesday, news happens, we go up, and we end up going close to new highs. How long will we go? Do we roll over tomorrow? I know a lot of my friends are more bearish than I am. I think I'll take it a day at a time and see what the market shows us. But boy, it sure ended up feeling like this market's strong. Based upon this, its impacts on what I'm doing, and I certainly have gotten more long. I noticed this weekend I had more positions than the weekend before, and I've been a little bit more aggressive, and it's paid off. I'll conclude the slide portion with markets to date. You know, if you just met the averages on high growth stocks with NASDAQ stocks, you're probably up close to 30% without outperforming the indexes. It's a pretty phenomenal year. Friday, opposite of last Friday when I had a sea of red, this is a sea of green. I basically, if you start where my arrowhead is, I take the major sectors in the S&P. I have their key components. Sometimes the components will stop trading because they've been bought or something, so I have to update this periodically. But I just like to take a step back during the day, and I can say, wow, this was a strong market. Utilities were weak, as exactly as you might expect in the setting of market strength and rising rates, and real estate has some red in it as well. But for the most part, a very strong market. If we look in Thinkorswim itself, instead of just my slide here, there we go. Boy, it's so good to be home where I have good internet versus hotels, where at home I have gigabyte speed, and in hotels I'm lucky sometimes to get 4 or 5 megabytes per second. We are not yet at our highs again. This is a background for, it's running from a year in Thinkorswim. It's the S&P futures. A new person buy signal, interestingly, came in on Friday. Futures right now are down a little bit. We hit the high in this market, so let's work Friday, Thursday, Wednesday, Tuesday. So we hit a high early Tuesday, opened up, traded higher, and then closed down on the day. And for those that, or is that Monday? That was Monday, rather. And if you think about the futures start trading at 6 o'clock on Sunday, so by the time the market opened, it was much lower than the high. But the futures hit a high before the market opened on Monday. The low was back here a little bit less than a year ago. So clearly that's a market that's gone up. But when I think of a blow off top, I don't see a 30-degree angle or 40-degree angle. I start thinking of 75 to 90-degree angle where the price spikes up much faster and much higher. So I don't feel the blow off top, but I thought it was interesting that it was discussed on CNBC. And Ned Davis, who's a very respected and often very accurate market timer, also brought up that this was a blow-off top. This is the E-minis. If I look at the NASDAQ futures, almost the same picture. Highs of the year on the futures occurred before market open on Monday. New buy signal on Friday. Much closer, obviously, to the highs than the lows. If we look at the Dow futures, and let me skinny this out. Same story all over again. Monday before market, the highs. Friday, a person buy signal near the highs of the year. Highs all time. The Russell, which has been the laggard, and this is a IWM ETF. Let's see if I can. I don't know if I'll get, let's see, WRTY. Should be, yeah, I'll look at the futures on the Russell here, so it's like the others. And again, the same picture, except the Russell hit their high for the year on Friday. So that's really impressive. The Russell's been the laggard, but the laggards performed pretty well this year as well. If I look at the VIX, if the markets are strong, the VIX should be down. And here we go. This, I believe, Friday, Monday, Tuesday, and then failed at the 200-day moving average and came Wednesday, Thursday, Friday, came right back down. So it's been hard to make money on the VIX long. And for those that don't use the VIX or play with the VIX, it's a measure of market volatility. High volatile markets are markets that are tough to make money on the long side, although you can make money on the VIX to the long side. And George Lee, my buddy, often says, you know, when the VIX is low, look out below. And when the VIX is high, it's time to buy. VIX has been low for a long time. My amendment to that comment is It's when the VIX starts to move up is when you want to be careful. The VIX we've seen over the last couple of years has just stayed low for some time. This is the futures. It's much more active than the cash traded. And this is the dollar, which, depending on what time frame you look at it, I've been saying it's been sideways. And, look at our closing price. And the market's been oscillating around that space, that price for going back for months. So we have been sideways, in my opinion. Let's bring this back up to all four. If I was to look at the weeklies, I'm just going to look at it in the slide for the purpose of brevity. You can see the great performance across the markets, and you could see the laggard effect in the Russell, but that it actually broke out of its trading range and closed strong on Friday. The VIX sideways, and the dollar, although sideways for months, is off of its lows, but frankly off of its highs as well, so sort of in the middle of the range. Rates drifted higher this week, especially with the employment numbers on Friday. You know what that means for bonds. That means bonds will come down. Rising rates should be good for banks, especially regionals and insurers, and both of them peppered my large list of stocks that I looked at. AD lines, all-time highs, and what I've done here is I've taken the ETF for the Russell 2000 and the ETF for the Russell 1000, and you can clearly see that large stocks here have outperformed, but you also see that the small caps actually started moving this week. And this is all-time highs on the AD line. I don't think big market corrections and bears start immediately after all-time highs on breadth. The spread between the 2s and the 10s, a little hard to see, but actually ticked up this week, which, reduces some of the chatter about impending recession on CNBC and is related to this widening spread of the interest rates and the yield curves. Breadth remains strong. The number of stocks above the 200-day increased, as well as the number of stocks above the 40-day SMA. But if I look at my 13-week new high, new low, we're approaching reversal zone. We're not at a mandatory reversal zone, but we're at a point where we start to see reversal. So that tells me it would not surprise me to see a pullback in the next couple of days. Does not have to happen. If I'm sitting up here at the 95% or 99%, it's always you get the pullback. But as you look here at the peaks going back over the last several years, we're at a place where the market has peaked before you get a pullback. This does not mean a bear. This does not mean a massive correction. It means a pullback or a sideways move. We'll see if we can get rid of this divergence on the McClellan, both the daily and the weekly, which has been one of the flies in the ointment of this rally. The buckets, 2/3 of the stocks in the S&P 1500 are above the center of their Bollinger Bands. That's bullish, while 10% or so are above the bands. That is not a signal. When I start to get 20, 30, 40% of the stocks in the S&P 1500 above their Bollinger Bands, you know what's going to happen. Everybody's going to move back into their bands, and there's going to be a correction. We did see a series of Hindenburgs going into Thanksgiving, but we have been clean. Now the HINDYs, as we've talked about, often predict a pullback. 1 out of 4 are major. We saw them earlier this year in August before that pullback. We did see a little bit of a pullback, but I see no evidence. If you look in this column here, there's no pink, which means the numbers of new lows has dropped while the number of new highs has increased. In fact, on the NYSE, we have 8.45% of the stocks are at 52-week highs, while less than a quarter are at 52-week lows. That is not the sign of an impending market collapse. It's a strong market. Market tone, you could see that on Monday we had a series of kahunas to the downside that took us out of a choppy bullish session into, on the Woody indicator, a series of red, which is a bearish tone of the market. And what happened on Friday? we had a series of kahunas across all the major indexes, which hasn't flipped us to green everywhere, but often is a predecessor to watching the market switch its tone from bearish or chop to bullish. On the sector strength, which would be down here, we saw a bunch of kahunas on Friday. The leading sector is healthcare. I think you know that if you're trading this market. If I go back to what we call the canaries, price line obviously called booking, but it's fixed in the graph, and I make a synthetic index of these shares, we are about to test all-time highs again. We broke out from resistance. That's bullish in my mind. Be interesting to see if Netflix, which has been a pretty amazing performer in first quarter earnings, what happens this year as it's a different time for Netflix now with Disney and other competition. News and earnings. I think the biggest news this week is that there is a FOMC announcement and a press conference on Wednesday. I think most, if not all, people are going to be expecting the Fed to do nothing, and hopefully they will not signal that there's anything more than a pause here and not signal concern about tightening. I think this is one that will be fine, but I think at some point in the new year, the Fed's going to have to look at the economy and say if they're done cutting. And Powell has done better of late, but he certainly did not thread the needle in the beginning of his time. So just because of that, it's a busy news week. You got Fed head speaking on Friday. You've got some employment or jobless claims on Thursday. You got PPI and CPI, Consumer Price Index this week, core and regular productivity. So there's enough news to keep us hopping. Earnings season starting to cool down. There's still things here that might matter. They certainly matter if you own it. GameStop, which has been a dog, has been moving of late. Some retail, American Eagle, Children's Place, Lululemon. Who would have thought the stock runs up because men are buying their clothes? I love their pants. Sienna, Costco. So there's still some good things out there. So markets end the week on strength after limping into Monday's open. CNBC and Ed Davis have called that we're in a blow-off top. Are we? Will strength in world economies drive markets higher as central banks move to the sidelines? Hopefully. News will continue to whipsaw. We'll have the articles of impeachment this week, which could or could not matter to the market. I mean, frankly, I don't think anybody's paying attention to them because they know you need 20 Republican senators in an election year to switch sides for this to get for Trump to be impeached. I think that's unlikely. China news. I mean, some days we're on, some days we're off, some days we're on and off. Some days the Chinese press and our press say different things. I call that whipsaws. And there's more tariffs across the world. Now we're looking at tariffs on French wines as a response to some of their digital taxes. The amazing thing are these numbers on the bottom. These are year-to-date performances of the major indexes. This is the year where my guaranteed returns in my annuities, which I have one, despite what Hughes would say about not selling one of them. I think his name was Hughes, to his enemy, where you got a guaranteed return, but it caps at 15%. This is probably one of those rare years where that's a loser. On your trading, are you above 30%? Because if not, you're underperforming the markets, which is, what a year. Wow. Let's go on to my top-down review and see if we can get a sense of what the market is doing. I have a small part of my net worth in annuities, and annuities, I guess, I hate to say that I'm high net worth, but modestly high net worth individuals. It's great because you can design a product that pays you a pension, which is a loan against your accrued value, and it's tax-free. And for someone like me as a physician who doesn't have a pension from work, it was a way to create income in retirement outside of drawing down on my investments, which I tried that once and I didn't like it. I always go into my trade station and I very quickly want to look at the major indexes. I look at 6 things. I'll look at them in detail on the E-mini, and then I'll rapidly go through the others. Number 1, are we in a buy or sell? So we went into a buy signal on the futures E-minis on Friday. This is a John Person buy signal, trend change, whatever you want to call it. Green arrow is a buy. A red arrow, which would have been Monday, was a sell. So I look at daily, weekly, and monthly, and we're in a buy in all time frames. That's awesome if you're bullish. I look at the color of the paint bar. Green, it says I can be long, or is an Alexander Elder indicator, or I should hold, I shouldn't be going short. Red says I should be short or holding, I shouldn't be initiating new longs. And blue is neutral. I'm green, blue, and green, so that's pretty bullish. And where I'm at in my envelopes, the third thing, well, we're kind of neutral here, up on the top on the longer time frames. The fifth thing or fourth thing is these red dots here signify potential MACD divergence. As we're approaching a new high here, we're not even turning positive on the MACD. So clearly, as I look from this peak to this peak, the MACD is not giving me the same histogram. So the MACD divergence, as we see on the McClellan oscillator divergence, suggests to me that there's more risk underlying in this market. I come down here, I look at my weekly bongo, which did not change from green to red, which is the middle of these 3. That's my long-term market trend direction. And then if I look down here at my high jump on the NASDAQ, it's 90. I believe last week it was 94. So if I'm in a blow off top, I would expect my high jump to be spread, and I would expect to be at a top. I'm neither at the high jump peak, nor am I at the highest of the year. Yes, if I look at this chart, which goes from 2009 on a monthly E-mini to today, that is one hell of a run. But, and perhaps these 2 spikes here the last 2 months is the blow off top. I'm not believing. The Dow Jones Industrial, or Dow Futures, very quickly, does it look any differently? Nope. And we're at, is that 82%? So that tells me no blow off top and extension there. I look at the NASDAQ futures. They've been very strong, yet is it any different? Looks just like the S&P. It's at 87% on the high jump. And the Russell futures, which had a nice week, you start to see that red dot on the divergence after the big run. That may be concerning. And we're at 97%. So of all the major indexes, probably the one that I think is most at risk is the small stocks, based upon that high jump. But this is bullish, and I see no reason for a bull like me to run for the hills. The dollar, as I said, it's sort of been in a trading range going back several months. It's in the lower half of its envelope, which could be supportive for metals and other things. Although they seem to have come back as risk in the market has also seemed to have come down. So enough of trade station. Let's open up HGSI. And I'm going to start with the major market analysis groups. I go into Major Markets Plus. I hit my warehouse view. I'll open up the same group over here. I'm going to change it to my top-down view, which is how I rank the indexes. And what does it show me? It shows me that small stocks, mid-caps, Russell, NASDAQ are on top. Well, that should be a great period of time for a growth stock investor like me. Gold and silver, dollar on the bottom, volatility on the bottom. That's very supportive for somebody who's trading stocks and, in my case, trading growth. Let's open up and look at some of these major indexes and see what we see, if there's any signals. And I don't think we'll have to spend a long time on these. I'm going to open up a weekly. If I scare you with all the funny names of my indicators, a couple of points. The first one is blue and green are bullish, red is bearish. That if you email me at hgsidoc@gmail.com, I'll send you a bunch of videos where I go through the definitions and sort of a little history lesson of what was taught to us by Ian Woodward, who really was a brilliant man, a wonderful person, and a great teacher. So, I've been sort of playing with you for the last several months by saying that I had the Jeffrey indicator here. All that indicator was my interpretation of John Person's indicator without knowing what was in John Person's indicator. I did it for personal use and so that I could show John the power of HGSI. He has agreed, has signed contracts, and we are working. George and Matt, I should say, not we, because I'm not part of HGSI's team. George and Matt are working to incorporate those into the program. You'll get less signals than I'm getting because he filters it. But here we are. Buy signal came in on Friday. This is cash market, not futures. I've been drawing this line here showing the prior highs. We broke out above it. Little pullback here. What's not bullish on this picture? Let me go to the one that's the index view. And, right now I'm bullish. We had a kahuna on the market, pocket pivot. And here's where those Hindenburgs came in a few days ago. So that's the S&P 500. Again, I'm repetitious, but I'm showing you what I look at on different platforms. Dow looks just like the S&P, enough said. The NASDAQ, again, the same pattern, strong pullback on Monday. Tuesday opened lower but closed higher, therefore a open bar with green, and then a gap up on Wednesday and a strong close with kahunas, etc. Notice up here the weekly bongo, which is my long-term trend indicator, did not falter despite the pullback early in the week. And then lastly, the Russell 2000. Again, you can just tell by the pattern, not as strong as the other indexes, but did break out to yearly highs earlier this week. Oh, that was fun. I set the wrong setting on the alarm. My wife was getting the dog out of bed and putting him back in my office with me, and the alarm went off. Sorry about that. But you can see the Russell, also a buy signal, kahunas, pocket pivots, weekly bongo green, strong market, despite the comments from CNBC about blow off top. Now, if I was to cut this move here, this massive blast off the bottom, notice the rate of ascent. And if I was to add that here, so that over the next 2 to 3 weeks, the market went up like this, I'll buy that we have a blow off top. Right now we're doing this with small moves up. That's not a blow off top. If you look out at a weekly chart, how is this a blow off top? We haven't gotten to all-time highs on the index yet. So I'm sort of not a believer this is a blow off top. I've said that enough times. If we look at the ETF that is made up of the IBD 50, it looks kind of like the other indexes where it had a buy signal on Friday, but like the Russell, has not gotten close to its prior highs. Again, these are cash versus the futures, so they may look a little bit different. The dollar, US dollar on the cash looks a lot stronger than it does on the futures, but it's sideways for the last several months. If I look at gold with the strength in the market, you can imagine what gold must have done on Friday, and you wouldn't expect gold to do much except be down. And gold is that's a downtrend right now. I know there's gold bugs, and sometimes I jump into gold, and then I wish I wasn't. And then silver will look a lot like gold, I suspect. A little bit more loose. And then oil, is this the time to buy energy stocks? Oil popped as OPEC seems to be doing more controls. to limit supply. It'll be interesting to see how that pans out. But I can tell you, when I did my top-down review, there were a number of energy stocks that made it. Once I have gone through and made a impression of what the market will do for the next day, and I do this part so far on a nightly basis. No, I don't cut and paste and stick in places, but I do this review. I then go to number 7, which is the industry groups at the warehouse. It changes here. As you can see, I've got 175 groups, and I do a 2-day force up, which will bring the fastest, strongest moving groups to the top. And I have 78 positive groups. I look at the 2-day down, which gives me a sense of the distribution to up versus down. And all I've got to the downside are utilities, precious metals, and for whatever reason, medical equipment to the downside. So 78 to 3, that tells you how strong the market ended the week. If I look at a 5-day window, I've got 5-day down, I only have 9 groups down. And on a 5-day up, I have 76 groups up. That tells me the majority of the industry groups in the market are moving up. I got to go talk to my security guards, tell them I'm still here. The other big thing on energy, just thinking about it, is Aramco, I think, goes public on Wednesday. So the Saudis certainly have a reason to push the price of oil up. So we look at the industry groups that are moving up. We'll go the 2-day up. And this is where I like to play. I want to look at the top 10 groups or so, look at what stocks are leading. And for those who don't know how I do this, I pattern recognize. This will bring the top industry groups to the top. If I right-click on semiconductors, change to index group, this brings the best stocks or the highest momentum stocks to the top. And then I double-click. It brings my stock down here. I make sure that I'm not alphabetical order because this is not alphabetical. I changed my view personally to my view for stocks and tighten it up one notch there. There we go. And I want to take a look at the market. So very quickly, first line here is Hindenburg omens. This is a signal of potential doom and gloom in the market. The next are my weekly and daily bongos. Those are my trending indicators that I was involved with a few other folks to develop. The third one down, or fourth one, if you include the HINDYs, yellow, red, and green, that's accumulation distribution, sort of the A, B, C, D, E of IBD. Then I've got the 13-day force and the 2-day force, which I don't really use from a charting perspective anymore, so I should take them off. And I end up with my buy-sell indicator here, which is my derivation of John Persons. And sometime this week, I expect to get from George a test package of the indicators. The names will change, the filtering will be applied, and I'll create a set of scans and other things in charting, and then tell you more about how you can get the add-on. This here is the high jump bar. When the high jump bar is touching the top, that's usually telling me we're stretched and the market's going to pull back. I don't like to buy things when the high jump is at the top. Ian never talked about the low jump bar, but it kind of turns out when you get down on the bottom, when you get a reversal signal like a green candle low while you're on the low jump bar, it might be a good time to bottom fish. The green bar is a green candle low, the red bar is a red candle high. Then we get down to some of my regular indicators. This here is the Morales and Catcher Bible gap up. You don't see it on Micron. The yellow is a squeeze. Derivation of John Carter stuff, although John didn't invent the Keltner channel inside the Bollinger inside the Keltner channel. The red and blue here from David Elliott, mobile breakouts and mobile breakdowns. Green is bullish across the board, red is bearish. This gray line is one of the superstar aspects of HGSI. It's the industry group strength. I'm a top-down guy, I want to buy groups that are doing well. As we work our way down, I have 4 moving averages on my chart. In magenta is an 8-day exponential. Then in the rest are simple. In green, there is supposed to be, there it is. In green, it almost looks black sometimes. This is a 17-day simple Blue is a 50-day simple. Red is a 200-day simple moving average. These dots are PSAR from Wells Wilder. These lines here that are red when they're above price and green when they're below is a chandelier stop. The little arrows or fat arrows here are the indicator I've been talking about, which is reproduced here. If there's a pocket pivot, they'll show up on this row. This is on balance volume. These colors here are market indicators. When I see a green, that's called a eureka, and that's sort of the follow-through day, similar to what IBD uses. It tells us that the market has some confirmation, and it might be something we might want to consider going long. When I see a red one, it's called a phoenix, and that's a sign of market potentially going to the downside. And down here is a Ian indicator called the kahuna, which is a percentage change within a percent B on a daily basis, and it often signifies a big move. So how do I put that together? Micron is in a squeeze. It had a mobile breakout. It had my indicator. When I say my indicator, until I put John's indicator in, I'm going to keep calling it my indicator because that is my indicator. John's adds filtering, and I'm not even sure what's in John's indicator because he doesn't share it with anybody, so I had to guess. So for now, my indicator, and I had a big kahuna. That's all very bullish. This red line here is the chandelier stop. I'm not really planning on playing Micron this week. I don't know enough about DRAM and commodity nature of it. But if I was to play it, I would be paying attention to this and setting my buy stop above the chandelier stop. NVIDIA, it was such a great stock back here that Kramer named his dog NVIDIA. Then it had a crash here, and now it's running again. NVIDIA, this run up here was related to the need for power in the blockchain Bitcoin craze. Then that stopped, and now it's with cloud-based and other things running again. I'd rather buy it on pullbacks, but this thing may not give you a pullback. I'm not chasing it, but it did pull back a little bit into the 17-day. Next one down is Intel. Doesn't look that exciting today. Qualcomm, this is kind of where I start looking. I look for a stock that's in an uptrend. Now this is loosey-goosey, but clearly on the weekly since January it's in an uptrend. I look for on the short-term time frame a pullback to support, so a pullback to the 50-day moving average. Now I wouldn't buy it here, but I'd start looking for kahunas, mobile breakouts. I'd love for it to go sideways here before that happens, so I'd probably stick this on my buy watch list. Not buying it tomorrow, but watching to see how it sets up. Broadcom, a high base here. Earnings are out this week, so I would probably pass. I don't usually enter knowingly with earnings coming. Let's see if there's anything I like here. Analog devices, uptrend. It's been going sideways. The moving averages have caught up. It's in a squeeze. It had a mobile breakout and a kahuna. The weekly buying will turn green. Again, it's a little looser than I want to see, but that's one I would not object to putting on someone's buy list and watching. And if I see one that looks great, I will actually work it up and show you how I might handle it. So that was semiconductors. Exploration and production, I like ConocoPhillips from a pattern. Here's a stock clearly in a downtrend. It has failed multiple times at the 200-day moving average. And here it went against it for several days, and on Friday it strongly moved above it. You got a mobile breakout from a squeeze. You have a pocket pivot. You have a kahuna. Something I like is when the relative strength versus the spider crosses above its moving average. I call that a magic line cross. We're above that, which is bullish to me. It doesn't have earnings per share growth, which is bothersome, but that will depend much on where oil prices go, and it has a 2.2% dividend. If I was interested in buying it, and I am because I don't have a lot of energy in my portfolio, I typically would look at this and say, I'd be interested in buying it if it moves above the high of the day, so in the 61.45 range. If I was to pick my stop, I would look at the lowest bar to start with in the last four, so that's 56. That's a pretty long bar. Now I'm going to get into why I might not buy this. Let's see, 59. Is that really a low? If low is low here is okay. Let's get the right bar. So the buy price would be 62.20. Ignore what I said before. The low here is 60. The low here is 59. The low here is 59. And the low here is 58.60. So let's say I set the low at 50. My stop at 58.50. I put my buy stop in at 59.20. At 62.20. So 58.50 to 62.20 is 370 on a $60 stock. That's about 6%. That's a risk I could deal with. So that's the first thing I look at. Then I'll decide whether I want to buy stocks or options. Since it pays a dividend, I might look at buying the stock. Sometimes I open positions with options where I either buy a call or I do a spread, either buying a call and selling it out of the money call, or buying a call and selling a put at the same price, which mitigates the cost of my option. But this is on my buy watch list, as you'll see later. Then you're going to see a bunch of stocks that look like this. Now, I could squint, and make believe, and feel like I know what I'm doing and say, we have higher lows, and we've got some higher highs. And if I want to convince myself that maybe I should be buying more energy, this is a pattern you're going to see over and over again. So EOG Resources, a mobile breakout coming out of a squeeze. And by the way, that's not me moaning, that's my dog begging, and I'm ignoring him. Multiple kahunas. This is EOG Resources. Apache doesn't look the same. Occidental does. Pioneer Natural Resources does. Diamondback. So, you're starting to see, here's Devon. I like this one, the multiple kahunas, mobile breakout from the squeeze. At least next quarter, pretty phenomenal earnings per share growth. I see a lot of stirring both in the oil patch as well as the services that make me wonder if energy is about ready to make its turn. On the biotech, the reason why people like biotech is because you can go to sleep with your stock being 30 and wake up with it being 60. Because the small biotech companies, when they get positive data, they often get bought at a premium by big pharma. This stock's market cap today is $2.7 billion. Its market cap before the move was probably closer to $1 billion. This one's done, and I would move on and not spend any more time with it. But one of the reasons to buy biotech is you get giant pops on drug approvals, and you have companies that are bought once they have something hot by larger companies. Speaking of larger companies, Biogen, IDEC had some information about their Alzheimer's drugs. If somebody comes up with a treatment for Alzheimer's, you might expect that there could be a really big opportunity coming into the market. And Biogen is one of those companies. I'm not sure it's there yet, but that's what this move here was about, on positive Alzheimer's moves. This was the down move, was on they had negative moves. That's the downside of biotech, is it's whipsawed by news. Immunomedics is has a drug for breast cancer that looks interesting. I don't work with them, so I can buy them, and it's one I'm interested for several reasons, including the fact mobile breakout from a squeeze, a kahuna, and what's called a high close doji on the weekly as indicated here, which is also a John Person signal. So Immunomedics, although the problem with Immunomedics is I'm going to have, I'll probably buy it in the 21 range, And where do you put your stop? I think you got to give it down to here in the 18 range on your stop, which means it's much more than 4 to 6% risk. But that's the nature of these movers. Kodiak Services, a big move up, and now it's sort of flagging. Don't know anything about this guy. Epizyme looks just like Immunomedics on positive data and a filing to get a drug approved. If we look at the market cap, which sometimes is more important than the stock price, it's 1.6 billion. If the drug gets approved, it's probably a 3 billion market cap. So a potential double there. Or if the drug is denied by the FDA, it goes back down into penny stock land. Again, that's the roulette of biotech. Gilead Services, sort of a sideways. Rocket, here's another breaking out pattern. Biotech has been on fire. I wanted to show you, let's see, maybe it's in specialty pharmacy. I'm just going to put up Amaron in case we don't see it in specialty pharmacy. If you want a lottery ticket, this is Amaron. Amaron has already had what's called an advisory meeting where the FDA asked experts to review their thoughts on their drug, and the advisory panel voted to approve. The FDA has the final rights, and the FDA date is December 28th. The drug is already on the market, and it's a derivative of fish oil, and the drug is looking to extend the label to say for use in patients who are on cholesterol drugs called statins, who have high triglycerides, who are at risk of heart disease. You are talking an addressable population in this country of tens of millions of patients. If this drug gets the line extension, it would not shock me for the stock to open up at $60 a share. If they get turned down by the FDA, it wouldn't shock me for it to open up in the single digits. It's a lottery ticket. I think, it's an 8 billion market cap. A lot of it is thoughts are baked in. It becomes an acquisition candidate. If I didn't know the story, I'd be seeing a loose cup and a handle and potentially a breakout here. I like Amarin, but you have to know what you're buying. You're buying a lottery ticket that could be worth a lot or be worth nothing. I don't do much electrical power, so let's skip to oil gas services. Now, the same thing I mentioned in oil patch is showing up here where, look, same pattern. Is this done going down, higher lows, higher highs? Higher lows, higher highs, cross of the magic line, kahunas, pocket pivots, out of a squeeze, high close dojis on daily and weekly. I think it's worthwhile considering some of them in the services. I own Halliburton in a small position in Schlumberger, which has a similar pattern. Rig has looked the same. Some of these were one-time big numbers. Look at the demand in this stock, 3 to 1. H&P, another driller, 7% dividend. PTEN, another driller, a dividend of 2% with 2.1% demand. Then you've got this guy, where's Pump? Hold on a second. Who's got the best name for oil services called Pump, really beaten up, fell from 25 down to 7, 8. These look like they're moving. Again, you're bottom fishing, you're not buying high growth stocks, you're not buying breakouts from strength, you're buying moves from weakness, but you can make money on these as well. Rotation. Specialty apparel, there have been big winners and big losers here. Don't know much about Genesco, and it's had a big run, so I probably wouldn't be chasing. That's not my investment style. But I look at something like Express, which was basically buried and left for dead, almost a penny stock. It's breaking out with power here. It has earnings coming back into the stock, a turnaround play. I own some apparel. This one looks interesting and cheap. Capri, another one that looks interesting, breaking above the falling 200-day moving average. Again, these are not market leaders by any reason, but with market rotation, we start moving into some of these oversold and undervalued stocks. Banks, if rates are going up, banks will be strong. And I saw a number of nice looking regional banks. I think the one I liked the best was Key, but there are a lot of them, and these are giving you breakouts here, mobile breakout from a squeeze, multiple kahunas in a row, and a pocket pivot. That's a very bullish pattern, so you'll see that on my list. And let's just look at specialty pharma. That's a group very similar to biotech. This is a stock I owned. I've been sitting on it forever. It's done nothing. I bought it at 5.5. It stayed 5.5. And why did I hold on to it forever? This looks like a lot, but this is when it moved up into the 5-6 range in 2017 when I bought it, because they had some early data for treating kidney disease in lupus patients, which is a big deal. They're likely to get an approval on the drug. Hence, it spiked from 6 up to 19 in the morning that day. What's its market cap? 1.5 billion. Again, on approval, it goes to 2 to 3 billion and probably gets taken out by a larger company. Acadia is another company in the Alzheimer's and CNS space. This has been a strong performer. Global Blood Therapeutics, man, sometimes I just wish I was allowed to trade stocks in companies that I seek to do business with. They have a new therapy approved for sickle cell disease, which has always been a tough treatment and a tough thing to take care of. And there's a lot of advances there, which is very exciting from a patient perspective. Too late for me. Let's look at its market cap with an approved drug, 4.7 billion. You go back here, it was in the 3 to 3.5 billion. Big move on an approval. I think they do veterinary stuff, ZTS. I don't know this company. It means they're not an oncology or cancer company. Veterinary vaccines and medicines. Nice looking pattern, big move up, sideways move. I'd like to see some action down here with my kahunas, but that looks like it's setting up. So I will go through a large number of companies. Another one, here's Amarin over here. Let's just look at this one, which I gave you, and then it stubbed its toes, and I bet you wished you would have stayed in. I've been in Hgsi since it was $8. The difference between being in it at $8 and not being in it is I held it through earnings. You can see earnings here, and you can see the stock sold off. The stock sold off to the 200-day moving average. It held, and it's now run up from 24 up to 48 in just about 2 months. It's just run up with the hype and the craziness known as biotech. I talked about, I think this one a couple weeks ago. No, not this one. Hold on, let me look at my portfolio because I kept a position just so I wouldn't forget the name of the stock. ALK. Oh, hold on a second. Just pulling up on my phone. What is the ticker? ALLK. I had a big position, then I kept 5 calls or 500 shares to see. I'm sitting at home. I had bought the stock, and this is where I got interested over here. Why? Because on this day here, I had a mobile breakout from a squeeze, and the first of 2 kahunas. The second day had the second kahuna. It's breaking above its chandelier stop, and I took a position here. And you love it when you buy something, it moves up $7, $8 almost in the next week, or 10%. And when you buy options, that could be a lot of dollars. And then I was sitting at home, and it ran from 98 up to 140. Was it on Wednesday this week? And I sold everything but the last 5 calls. It's got a flag here. I know why it went up. It shouldn't have gone up so much. So we'll see. I'll probably cash out, but I don't like to sell out at the top and then find out that it goes up another 100% and that somebody bought it the next day. So it's not unusual for me to take my profits and then on the remaining piece, which I'm up 335%, sit back and just give it a little bit of room. So I always go through these groups for myself. I build a watch list. The watch list that I have for this weekend is massive because, there are a lot of strong looking stocks. This is my watch list. Let me go into, I apologize for my dog's sounds. Please don't hold it against me. He is being a brat because I was out of town at the meetings. So you'll notice that there's a lot of clumps here. We got a clump on banks. We got a clump on energy exploration. We got a clump on oil, gas services, specialty of pharma, a couple of the apparels. The same groups that we went through are the groups that make up my buy list. Now, very quickly, I'll run through the first. Let me rank them. This is a raw combo. And I'm just going to very quickly talk about the top bunch. Commercial metals group, it's already broken out and run. When you look at the weekly, it's still got more ways to go. It was as high as 26, and right now it's at 22. I look at all these pocket pivots, and I look over here and I see the earnings per share growth coming into the stock. I'd rather wait for it to pull back like it's done in the past, so I wouldn't buy it on Monday, but it's on my watch list. Epizyme we already talked about. Enphase was a high flyer here that has pulled back. It's got great earnings per share growth here. Under demand, it's something that it might be at a decent point to go look at. R1 RCM, it's actually a competitor of mine. They do back office work for physician hospitals. A big run up. Why do I like it? You could certainly argue you don't buy a double top, but I wouldn't buy it right here. I'd like to see some momentum come in after it goes sideways, but I love the earnings per share growth in this turnaround play. Rent-A-Center, sideways move, give me some momentum. United Rentals has started to move, so I wanted to watch this on my watch list. It's got good earnings per share growth, certainly much higher growth rate than the multiple. Ulta Beauty, no, I didn't play this. I was out of it, but do I want to get back in? I might. It's got earnings per shares growth, mobile breakout from a squeeze, a kahuna. The reason why this is not a Bible gap up is because it was so far down in its pattern. Certainly worth watching. Ironwood Pharma has not had the same blow-off top run as some of the others. It did have a high close doji this week, so it's on a watch list, and I'll define what that means. A number of the shipping companies made my radar this week. Big moves in these stocks, went sideways, look like they want to go again. Great earnings per share growth. Some of them pay a dividend. This is Scorpio Tankers. I talked about ConocoPhillips, talked about Amarin. VIPS, way too late. I wish I would have bought it down here. My mistake. I'll put it on a watch list and look to buy it on pullbacks, especially if it gets a pullback with some of the China bantering. Euro NAV is another shipper. Big move up, pull back to the 50-day moving average. A pocket pivot, a kahuna, mobile breakout of the squeeze. That's the kind of stock I like to look at. Great earnings per share growth. Again, these shippers, marine shipping, there's a bunch of them that look good. I showed you pump for Parker Hannifin. It's kind of loosey-goosey, but breaking out here at recent highs. When I see multiple kahunas in a row, I pay attention. That's Parker Hannifin. I don't own an airplane stock right now. I might be interested, especially with the holiday season. Here is a South American airliner, GOL. And look, I had a couple of kahunas sitting on the 50-day moving average, a mobile breakout from a squeeze. Now, that's the pattern I like to buy. The risk is it just goes sideways for a long time. So I will have 3 stops on this stock. If I elected to buy it, I would put a buy stop above the high here. I would put a sell stop probably somewhere around this 200-day moving average. And I would put a time stop in about 10 days. If it doesn't break out, I want to get out because why do I want to go sideways forever? I don't get paid a dividend holding a stock that doesn't pay a dividend. Cloudera is a application software, pretty beat up, starting to move. I want to watch it. I'm not sure I want to buy it. Let's see if there's anything else here that looks worth talking about specifically. Another one of my favorite patterns, this is IQVIA. It is an expensive stock, therefore a relatively expensive option. It makes money. It's a leader in healthcare data. Another competitor of mine. Big bull run. What happens every time it pulls back? It breaks out and goes higher. It's pulled back to support. It had a kahuna, a mobile breakout. And if I believed in trend lines, which I do, you could probably start thinking about a trend line down here. And we're not quite there, but if it just goes sideways a little bit, it'll catch up. I just think this is buying the stock at the right time. This is IQVIA Holdings, not IQ, but IQV. Another energy play. This one's already broken out above its 200 days. And just for those that are new to me and you're thinking that I'm a lunatic, what person will have a watch list of 51 stocks? How does anybody possibly manage that? And I'll show you what you do. You use technology as your friend. And what I will do is I will do a couple of different things. I will build into TradeStation. I have the sectors that I showed you before that are all, it hasn't traded yet today, but I keep the stocks that I'm interested so I can be following them. And then I have a workspace, which is a radar screen here. And in radar screen, I put my stocks I'm interested in. Somewhere down here will be my buy watch. And I will be monitoring during the day for things like the cigars Q indicators, my Hgsi indicators, pocket pivots, Bible gap ups, when is the next earnings date, and then I can start monitoring John's indicators, HCDs, LCDs, PPSs, and changes. And these signals, especially when they're blinking, is what drives me to get in or out of a position. If you don't have this program, you could always go into Market Watch. You can, I'll go to Buy Watch, let's see, which I haven't updated yet, so I'll just go Buy Watch here. Let me pull them in, import, select file, and I know where my file is. It's in here. I'm going to find Buy Watch. I'm going to replace. So now in Thinkorswim, I put the stocks in that I have interest in, and I have some of my indicators. I have a momentum indicator that's proprietary right here. +1 gets my attention during the market. -1 is not good. I can look for kahunas during the day, high closed dojis, low closed dojis, pocket pivots. So I'll be scanning this during the day, looking for things that may have made a difference. And then the other thing I might do is if I go into Scanner, I have a scan that I use to find the best stocks in the market to the upside. And this is going to scan the entire market. But what I might do is I might run this, but instead of running it on the entire market, I might run it on my buy watch list. So I'll get the same benefit as in TradeStation, where I'll be continuously updating it based upon one of my momentum. And these would be the stocks that I'd probably be looking at the hardest. But what I'll do is I'll wait for the market to open and start running the scans and see what's breaking out. On that note, I think I've talked plenty. I hope you all have a great holiday season. Again, probably one more before year end on YouTube. If the add-on of John's stuff becomes available to me in beta format, I will do a live webinar demonstrating how I use HGSI intraday to find the stocks that I want to buy. And then we'll do something at year end. You all have a great week. The market is based upon my T2121 short-term oversold. Would not shock me to see a little bit of weakness to start the week. I'm not even going to say what futures mean because last week they were up over 100 points and then the market dived down from there. So I think we all know that you don't bank on 1048 futures, but right now the NASDAQ's down about 15 points, which isn't a big deal one way or the other. Goodbye, everybody. Sorry for the interruptions from alarms and stuff.